Hi, good afternoon. You're tuned into ET now, and this is Closing Trades. I'm Anisha Jain, with me Saisha Faridi. And for now, the market continues to tumble. During the trading session, there was a bit of a green, and we got excited that perhaps the worst is over. But no, that's not the case. In the last 30 minutes, there's that acute selling pressure which is back in the market. We're holding on to 23,400 somehow, but it's the likes of Shriram Finance, IndusInd Bank, Adani Enterprises, BEL, which are actually putting pressure on the market at this point of time. Bank Nifty continues to be the sore loser in the trading session. Acute underperformance there. That index is down 1.5%, almost a 700-point slide coming in as far as Nifty Bank is concerned. And now Rupee has also taken quite a bit of tumble. In fact, Rupee is very close to that 86 mark. The last time I checked, Rupee was around 85.94. So just 6 paisa away. There you have it on the screen. A fresh day and a fresh record low is what we have been hitting on the rupee. So very close to that 86 mark. One day there was a reversal after many days of decline, but we have resumed the downtrend on rupee as well. Weakness there as well. In terms of the individual names, IndusInd Bank down 4%. That Goldman Sachs downgrade is something that is weighing heavy on that stock. PNB, Canara Bank, IDFC First Bank. These are the ones which are in the red. So down anywhere between 3 to 5% at this point of time. But Aisha, from the broader markets, I think more or less it's a sea of red per se, because not many stocks holding out, and overall the advanced decline ratios is also not looking very impressive.
Oh yeah, not impressive at all. In fact, you've got a count of 166 standing to the declines, and look at the pain and the kind of cracks that you're seeing emerge, reacting to news flow and earnings. Case in point being a Tata Elxsi. 7.5% is the crack that you're seeing on the stock right now. There's REC, which is down 6.5%. Paytm is down about 6.25%. There's of course BHCL, which is also down about almost 5.5%. And one can really go on with the list of losers. But let's try and understand what's really going on in the market, and how is it that you should make sense of all the news flow. We've got Anshul Sehgal as well as Kunal joining in on the show right now. Kunal, the volatility continues. What levels are you monitoring now on the index?
Yeah, I think in this kind of a selling, it's very difficult to try and look at levels per se for the indices, because we managed to break below the critical points for the Bank Nifty. We were trading at a band just about that 49,500, 49,800 for the Bank Nifty, but today we've managed to break past below those levels of 49,400, 500 as a key support zone on the lower end. So I think that generally indicates that the weakness would now start to just about accelerate for the banking index. The concern for the markets today could probably have been exaggerated had it not been the IT index, which is still looking quite strong. There's been a very strong comeback from large cap IT names, and so far it's been durable throughout the day, right from the start, with the likes of TCS, Infosys looking quite charged up, and then you have the other large cap names and few of the mid cap IT stocks which have looked quite interesting and strong. So as of now, it's just that the sell-off in the market continues. The advanced decline ratio deteriorates. 23,200 still remains to be a key support for the index, but looking at the way the sell-off is accelerating for indices as well as for individual stocks, it could just be a matter of time that we may break below those levels also.
Yeah, but for now, there is a bit of a tumble on select names. So Tata Elxsi, of course, the earnings were weak. It's down 7%. IREDA, there was a decent amount of growth, almost 36% on the top line. Some of the NIMs and spread ratio did also improve, but the stock is seeing profit booking. REC is also seeing profit booking. You have Paytm down 6.5% right now. Piramal Pharma, Aegis Logistics, Shriram Finance, all coming under quite a bit of pressure. Shriram Finance being an index stock, down about 6% right now. On the gaining side, Ramkrishna Forgings is surprising, an 8% move. And of course, TCS has put the rest of the large cap IT in a great space. So gains of anywhere between 2 to 6% there. But Anshul Sehgal also joins us on the show. And Anshul, the question is, did the TCS number really warrant a 6-7% move? Because there was a bit of a top line miss. Yes, operational number was okay. Commentary is incrementally better. But did it warrant a 6% move to your assessment?
Hi, Anisha. Thanks for having me. In particularly this case, if you looked at the numbers yesterday, of course, there was a miss on revenues. But the order booking was strong, as also the outlook for order booking going forward also was kind of strong. Given that, and given the granularity of orders, it looks like this is a sector which is going to see tailwinds. Also, if you look at the stock prices have held up reasonably well in the midst of all this volatility across the board. So this sector as a whole looks strong. Any positivity in this strength, in the leading company in this sector, will obviously be bought into by the markets, which is what we are seeing today. So there is justification for this move, and one would say that this sector has tailwinds going forward as well.
Anshul, hi afternoon. It's the quality of names which is actually cracking and coming under pressure. That's getting a little alarming. That coupled with, that huge FI sell figure to the tune of about almost 7,000 odd crore rupees. I mean, these are some high HNI, FNI dominated blue chip counters and across market caps.
That is for me, Aisha?
Yes, that's for you.
Yeah. Hi, Aisha. So if you look at this month in particular, we have multiple key events which are likely to play out. One is, of course, the inauguration of the US president, whose tweets are already causing a lot of flutter in the markets, also whose commentary is causing flutter in the markets. Second, you also have this as the results season. Results have already commenced. And through this month, you will have activity on results. And third, the general economic activity in India, that also seems to be slightly weak running into this quarter. Given all of this, it looks like this is a period where we will see volatility. FIIs in the midst of all of this seem to be taking some monies off the table. Also, bear in mind that starting calendar year 23 till say the third calendar quarter of last year, we saw significant tailwinds in markets. Now, given so much profit, some money is being taken off the table. But long term, India is in a very sweet spot. We don't think that this is a permanent trend in earnings growth. Earnings has seen a seasonal slippage, but going forward, say in the next 1 to 2 years, earnings should rebound. In fact, even in the second half of the current calendar year, we anticipate that earnings will rebound. And given that, there should be positivity even in markets going forward. So this is seasonal, not permanent. That is how one should look at this sort of volatility in the markets.
Taken. So that's the view coming in as far as the market setup is concerned. But moving on to an ET now, exclusive sources tell ET now that the government is likely to hike the capex target by 10 to 12% in FY26 in the upcoming budget. Prakash, my colleague, is joining us with the latest on this one.
The next Union budget could see a modest increase in the capital expenditure target. We are learning from our sources that the government may take a rational approach before deciding capex numbers for the financial year 2026. In fact, various factors are being taken into consideration, and of course that include slower spending during current financial year. But the sources are indicating that the capital expenditure target is likely to be hiked by 10 to 12% for the financial year 2026. A very significant development coming in. However, a discussion is underway within the government, and any final call will be taken closer to the budget. As you are aware that the 2024 being an election year, capital expenditure target is little slower than the last year, but the government is hopeful to achieve 90% against the total target of 11.11 lakh crore, which is earmarked for the financial year 2025 on back of higher spending by various ministries in next 3 months. Along with that, key infrastructure sectors like railways, road transport and highways, housing may get 10 to 15% higher allocation. We also given to understand that the government is mindful about the fact that gross market borrowing through dated securities may rise in financial year 2026 in order to meet repayment obligation. Therefore, all these factors will be taken into consideration. And the government will try to make better balance between fiscal prudence and capital expenditure target.
Right, okay, on that note, we're going to take a very quick break. Come right back. We'll continue tracking markets. Now, and still in the red as we speak right now. There's bigger pain, of course, across the broader end of the market. Some of the volume laggards are bleeding quite a fair bit. REC, BHCL, Kalyan Jewellers, You've got a Tata Elxsi, and then of course within the Nifty, a BEL, IndusInd Bank, SBI, ICICI Bank, M&M. All these stocks continue to see correction. Perhaps the only island of green today, and profoundly so, is only IT. But CA Rudramurthy too on the show with us. Rudra, hi, afternoon. Good to have you on the show. Any short trades that you would have, Rudra, on your list? Or do you think the market would stabilize sometime around?
No, definitely not. Bank Nifty has already given a breakdown much before Nifty, and Nifty, it is just a matter of time. The recent lows of 23,200, 23,300 will be tested in a day's time, but definitely weakness is much more seen in financials, and I'll pick up only short trade. For me, Adani Enterprises looks weak on chart. One can definitely take a positional sell call on future. I'm looking at initial targets of 2,340 with a stop loss of 2,415. And similarly for me, banks are a very weak area and one can make a choice. Look at either PSU banks or even private bank, but I will rather sell weaker banks than selling stronger one. So for me, it is either a choice between Bandhan Bank, RBL Bank. These are all stocks which are definitely good to short on any rise. So for me, RBL Bank is a sell. One can look at shorting this in futures for a target of 151 with a stop loss of 157. So bulls remain only in IT as a sector, and those who want to buy the dip, wait for some more time, let the panic and the leverage get out of market, and much lower levels are awaiting to buy.
Okay, point taken. So that's the view coming in as far as the market setup is concerned. But just taking stock of some of the big movers at this point of time, in terms of the gains that we are witnessing, Bharat Dynamics is perked up a bit. Paytm is recovering from the lows. Vijay Diagnostic has been also doing okay. Z Entertainment is slightly coming under pressure, and then of course there are some of the other stocks that one really needs to watch out for as well. See, Rudramurthy, what's the take on Ramkrishna Forgings as a stock? It's up around 7.5%. And the other one that I wanted to discuss with you is also IRCTC, that Macquarie Initiation is lending some support to that stock.
See, when it comes to Ramkrishna Forging, strong support for this stock emerges closer to that 880-900 zone. From there, where you're seeing the bounce. In fact, today's bounce has been supported with volumes also, which is very good. So definitely, I will be a buyer at current market price, and on any dips to 930, 940 zone, I will buy RK Forging. Keep a stop loss of around 890, and look at targets of the recent highs which it has made, which is at around 1050, 1060 level, and post that still further move towards the 1150, 1200 can be seen in Ramkrishna. Also, IRCTC is another stock which is definitely holding strong in this weak market. But if you see, the selling on this stock has emerged from those levels of 1130. From there, it has been a relentless selling irrespective of market, and now there is some amount of bottoming out seen at levels closer to 750, 760. So with a stop loss of 750, one can buy IRCTC also. Look at initial targets of around 850 to come, but this is more a bounce kind of a buy on IRCTC. RK Forging is much better.
Anshul, we've just about begun the earnings season with TCS being out of the way, but where is it that you think that the EPS pain is now behind us and we could see some positive surprise this earnings quarter?
Aisha, that's a very relevant question, very important in the context of where the markets are, because in this market, while everything will fall, given that there is so much volatility, but what will rebound first is where you will have earnings visibility. And in that context, certain pockets where we anticipate earnings visibility are pockets like consumer durables, less so consumer staples. Pharma, we anticipate that even in IT, there is going to be tailwinds on earnings. Then there are going to be sector-specific opportunities. Capital goods, within that, there will be certain segments which will do very well. For instance, EMS should do quite well in terms of earnings. Aside from this, stock-specific, there will be opportunities in this market. There are certain segments of the market where we have seen certain cracks in market because of stock-specific reasons. For instance, in the ethanol space, grain-based ethanol, there has been an increase in feedstock price for which margins have compressed. And as a result, stocks and earnings have collapsed. Now, going forward, one could witness that there is a turnaround in earnings because feedstock prices come down, as also final product prices increased, which should lead to some uptick in earnings. And as a result, because stocks are at rock bottom, there could be some upside in earnings there. Then special situations. You have a lot of demergers which are happening in the markets, certain listings of subsidiaries, etc., where you could see earnings tailwinds because the companies which are getting demerged, those have strong tailwinds in earnings. And that could see some tailwind in even stock price as a result. Real estate, again, that is a space where we are seeing tailwinds. Banking, particularly in the PSU space, there will be upside in earnings particularly, but private sector banks, we will see headwinds on earnings. So this is somewhat of a structure that we are seeing on earnings in the markets. We will have to be very cautious on where we position ourselves in this market, because if we are in pockets where there is no room for disappointment, and disappointment does occur, and downsides can be material. Hence, earnings growth is what needs to be chased.
Sure, quite an interesting take there. But yeah, looking at the markets right now, it's only IT wherein you are seeing those gains actually sustain. But on that point, Anshul, what is the anticipation from some of those large HNI concentrated names? I mean, Tata Elxsi also out of the way, but a Persistent or a KPIT, for instance, which are, typically a little different from the pure play services companies like a TCS, Infosys, Wipro, etc.
Yeah, you're right, Aisha. And in these names, also one has to keep in mind that there has been significant uptick in stock prices over the last, say, 4 or 5 years. Of course, there is a rationale for this uptick in prices because these companies have executed very well. Take the case of Persistent. In 2019, when we used to hold it in our portfolios, this stock used to be 500 to 600 rupees in price. And X of the, or say, come of the split that has happened in the stock, it now trades at somewhere close to 12,000 rupees. So that is the kind of upside that this name has seen over a 5-year period. Of course, there has been excellent execution. Management has executed very well. That is really something that one will need to follow. If execution continues going forward, then there will be sort of support for the stock. But if they falter on execution after such a upside in stock price, there is no room for error. And also with valuations being where they are. Same for some of the other names that you have mentioned. One of the names you mentioned, of course, cracked today, again, because they did not execute as per market's expectation. And that's really the nub of it. If you don't execute at these valuations as per market expectations, then really downside can be material.
You have to be just careful where you're putting your money to work. But on that note, Anshul, we let you go. Thanks so much for making time and speaking with us. In fact, before we step into the short break, let me take the closing trade ideas from Kunal as well. Kunal, what's the closing pick?
So I'll go with a buy on HCL Tech, one of the very few large cap names, as well as from the IT pack, which is looking attractive. The stock has already confirmed a breakout today after opening with a gap up opening, and it's now coming very close towards a breakout of its lifetime high level. So looks attractive.
Okay, since we're talking about HCL Tech, let me also put the spotlight on what we're expecting come Monday, because the earnings will be out for HCL Tech, and ahead of that, there's a definite momentum build up. The biggest expectation is, of course, of a guidance increase. The guidance right now is around 3.5% to 5% revenue growth. The street is expecting it could be up to somewhere from 4.5 to 5.25%, so increase as far as the lower as well as the upper end of the guidance is concerned. It's a seasonally strong quarter for HCL Tech because the product business does really well, so we are expecting a double-digit growth in the products business. But overall, at the business level, we are expecting that the constant currency growth is going to be 4.5% with a dollar revenue growth of 3.3%. And maybe rupee revenue will get a bit of a tailwind with the currency tailwind, so 4.1% in rupee revenue, so that the number comes closer to 30,000 crores. EBIT margin will also see substantial uptick, 80 basis point, because the wage hikes will get offset by the product business performance, and that is something which will result in operational efficiencies as well, we believe. Profitability, that's why is expected to jump up materially, a 10% sequential improvement, so that the number comes closer to 4,640 crore. The deal win momentum has been steady, so maybe close to what we saw last quarter, $2.5 billion kind of range is what the company has been maintaining, maybe somewhere around that line. But as I said, the most important thing would be to watch out for the guidance and the management commentary. There's a new CFO on board, so maybe a few comments from him also would be looked forward to. That's the expectation from HCL Tech as far as Q3 is concerned. But with that, we are slipping into a very short break with the news that the market has stabilized a bit for what it's worth. We're closer to 500 than 400. Actually now back around the 400 levels, closer or maybe slightly off the lowest point of the day. We'll track that, but important news at the bottom of the screen coming in, wherein some top-level changes at RBI might delay the project financing norms. Remember, these project financing norms were going to be a bit detrimental for some of the companies, so perhaps a change in that is something which is likely to have an impact. We'll track that and on the other details in a bit, but for now, slipping into a very short break.
सर ने जो टर्म लाइफ इंश्योरेंस की
For one interesting podcast which has come through, the biggest interview of the season perhaps, billionaire and co-founder of Zerodha, Nikhil Kamath, speaks with Prime Minister Modi in his very first podcast. The Prime Minister opens up about his childhood, his journey so far and the government strategy under Modi 2.0. Here's a slice of that chat.
तो उनकी सोच, उनकी मैच्योरिटी, उसका रूप अलग है, बिल्कुल ही अलग है। इनकी बातें, उनकी बिहेवियर की जो चीज़ें सुनने को मिलती है, उसमें एक बहुत ही समाज के प्रति अतिशय समर्पण भाव। और इसलिए मेरा मत है कि राजनीति में निरंतर अच्छे लोग आते रहने चाहिए और मिशन लेकर के आए, एम्बिशन लेकर के नहीं। अगर मिशन लेकर के निकले हो तो कहीं न कहीं तो आपको स्थान मिलता जाएगा। एम्बिशन से ऊपर होना चाहिए मिशन। फिर आपके अंदर क्षमता होगी। अब जैसे महात्मा गांधी, आज के युग के नेता की जो आप परिभाषा देखते हैं तो उसमें महात्मा जी कहां फिट होते हैं? पर्सनालिटी वाइज शरीर दुबला पतला, ऑरेटरी न के बराबर थी। तो उस हिसाब से देखे तो भाई वो लीडर बन ही नहीं सकते थे। तो क्या कारण था? तो जीवन बोलता था। और ये जो ताकत थी, उसने इस व्यक्ति को पीछे पूरे देश को खड़ा कर दिया था। और इसलिए ये जो आजकल ये जो बड़े प्रोफेशनल कैटेगरी में पॉलिटिशियन का रूप देखा जा रहा है, लच्छादार भाषण करने वाला होना चाहिए, ये कुछ दिन चल जाता है, तालियां बज जाती हैं, लेकिन अल्टीमेटली तो जीवन काम करता है। और दूसरा मेरा मत है कि भाषण कला, ऑरेटरी, उससे भी ज्यादा महत्वपूर्ण है कम्युनिकेशन। आप कम्युनिकेट कैसे करते हैं? अब देखिए, महात्मा गांधी हाथ में अपने से भी ऊंचा डंडा रखते थे, लेकिन अहिंसा की वकालत करते थे। बहुत बड़ा कॉन्ट्रास्ट था, लेकिन कम्युनिकेट करते थे। महात्मा जी ने कभी टोपी नहीं पहनी, लेकिन दुनिया गांधी टोपी पहनती थी। कम्युनिकेशन की ताकत थी। महात्मा गांधी का राजनीति क्षेत्र था, पॉलिटिक्स था, लेकिन राज व्यवस्था नहीं थी। वो चुनाव नहीं लड़े थे, वो सत्ता पे नहीं बैठे थे, लेकिन मृत्यु के बाद जो जगह बनी उसको नाम राजघाट रखा।
और सर, जो आपने अभी कहा है, ये आज के पूरे कॉन्वर्सेशन का पॉइंट हमारे लिए यही है कि we want to tell young people कि think of politics as entrepreneurship. And what I'm hoping is at the end of this, 10,000 young smart Indians get motivated by your life, get inspired to try and be politicians in India.
लाल किले से तो कहा था कि देश को 1 लाख ऐसे नौजवानों की जरूरत है जो राजनीति में आए। और मैं मानता हूं कि लेना पाना बनना, ये अगर मकसद है तो उसका आयुष्य बहुत लंबा नहीं है जी। एंटरप्रेन्योर के पास जो पहली ट्रेनिंग होती है ग्रो करने की, यहां पहली ट्रेनिंग होती है खुद को खपा देने की, जो है वो भी दे देने की। वहां पर मेरी कंपनी या मेरा प्रोफेशन उसकी नंबर 1 कैसे बने, यहां होता है नेशन फर्स्ट। ये बहुत बड़ा फर्क होता है।
Okay, an interesting conversation there and interesting insights, which I'm sure we would want to watch in the longer piece of the interview. But other than that, it's quite interesting the way the market as well has been panning out. What with the selling, which is hasn't really abated meaningfully, at least. We're still down about almost 0.5%, just about around the 23,400 print in trade. And, like we've been pointing out, barring IT, there are no meaningful movers out there. There's a Bajaj Finance, JSW Steel to some degree, and Bharti, which is just about floating in the green as we speak. But yeah, major chunk of it is in the red as of now. Nishal Maheshwari too on the show with us. Nishal, hi, afternoon. What's been your takeaway from TCS's numbers, and does it give any sort of hint on what we can hear from the other IT majors?
Afternoon, Aisha. Thanks for having me on the show. I think after 2 quarters or after several quarters, basically, we've seen TCS coming and saying that demand outlook, especially on the discretionary front, has started improving. And I think that's a very big change, basically, on the outlook as far as the IT industry is concerned. Obviously, we have to wait and see, basically, if all other IT companies, the major ones, basically also give the same kind of view. But TCS being TCS, the largest company, obviously we have to say that the outlook on the US side, especially on the discretionary demand side, has really taken a turn. So I think that's very positive for the whole IT industry. I've been positive on the IT industry for a quarter now. I think going ahead, we will keep on seeing demand as well as outlook on the industry improving.
TCS being TCS is of course the first one to talk about some sort of recovery, but let's see whether it gets broad-based or not. That's something that we'll have to watch out for. Separately in the markets, it's IndusInd Bank which is coming under pressure. What do you make of the MFI pressure, Nishal? Do you think the worst is behind? Because just this week, we have seen some sort of recovery on Credit Access, Bandhana and a couple of other names as well. And the street is expecting that Q3 perhaps is going to be that kitchen sinking quarter of sorts for MFI. Would you start buying, or should people start buying now or wait for a couple more quarters of pain?
I think we should wait for a couple of more quarters, actually, to be really clear about that the situation is out of the woods. The major problem still continues to remain that I think today there was an article carrying that at least 6% of the borrowers from the MFI have more than 4 loans. Now, that is a very, very tricky thing, basically, because you are ultimately finding that people are taking one loan to repay the other. So that's not a very good situation. So unless you see two things is what I'm going to watch for. One is basically inflation coming down on the rural side, and secondly, we are seeing some improvement as far as the incomes on the rural side and the urban side are there, especially on the lower strata of the population. I think those are two things basically which will be closely watched for us to actually see that the turnaround in the MFI segment is happening. I think best avoided for the moment.
Best avoided, at least at the moment, and the street is avoiding IndusInd Bank as well. That too has been reeling under pressure when it comes to the MFI space. The stock down about 4.6%. Rudramurthy, wanted to come to you and ask you about Shriram Finance and IndusInd Bank. Would you be a buyer at lower levels, or at what level does it become a buy?
See, first a word on Indus India Bank. Last quarter results were definitely bad when the entire banking sector as such was doing good. And it has broken all the crucial supports also, and the final one being now at around 925, 930. So if it breaks this level of 925, 930, which is very crucial, we might see further lower levels which can be at 860 or even closer to that 800, 810 zone. So definitely an avoid, and I will not buy Indus India Bank at current level. Wait for lower levels, see how this quarter results will come, and then take a call. And when it comes to Shriram Finance, again, this is another stock. Once it got added into the inclusion of index, and then it was performing. But if you see last 1 to 2 quarter, it has been consolidating again in this range of around 3,500, 600 on the upside, and on the bottom, it is just taking support at around 2,700, 2,750. But however, if you see today's volume action and the price moving down, definitely again, this is another stock which is showing some amount of weakness. If you want to buy this stock, wait for lower levels, might be levels closer to the 2,500 or even much lower. One can look at buying Shriram Finance. So definitely an avoid for both Indus India Bank and Shriram Finance at current market price.
As that and Shriram Finance and the kind of selling that one is seeing over there right now, it's pretty much the usual suspects. There's Tata Elxsi, of course, which is facing quite the bit of heat. That stock down about 7.25%. REC, like we've been pointing out, a 7% decline there. Kalyan Jewelers down about almost 6%. BHEL, Naveen Fluorine, Paytm down 5.5% or so. Nishal, a fair chunk of the market has corrected quite a fair bit, right, in the last 52 weeks. Anywhere where you think that the selling could be overdone and the stocks could be in value zone, either a sector or any theme that you may be looking out for once the earnings season is out of the way, you would take a call, or even now you feel that they're much in value zone, price-wise?
So, Aisha, I've been wrong on the banking side. Now for 2 quarters, I've been saying basically that they are in value zone, and it just keeps on becoming more value. So I think there is one sector basically which is really in a value zone is the banking. But unfortunately, you keep on seeing that the pressure on the banking side just keeps on growing. Definitely on the private sector side, I think the large banks are in deep value now. By any historical standard of valuation. I think whether it is HDFC Bank, ICICI, Axis, all of them are at good value at these prices. So if you are really looking for value and you have an outlook of more than a year, I think this should be a good time to actually accumulate. The other sector which I have started liking at the moment, I think, is the FMCG, the staples part, basically. I think there also, I think the value has started emerging. We are seeing a good monsoon has gone there, basically gone past, and I think with the elections out of the way, government spending is going to get ramped up in the next 2 quarters. So I think that distribution of money also is going to happen. So rural side staple should do well. So both the FMCG staples and banking, I think these are 2 good places basically where there is real value.
Clearly, banking is in a value zone and a lot of select names as well. But consumption too, at least yesterday, was doing quite well when the rest of the market was weak. FMCG was doing well, and that was led by perhaps some sort of enthusiasm coming in from Avenue's numbers as well, because they had come out with a provisional update earlier that 17.5% growth had got the street excited. But what about the margin performance and what you should expect from other internals? My colleague Snehi is joining us with the assessment as to what we should expect from Q3 performance come tomorrow.
Well, yes, so a decent quarter is what we can expect this time coming in from Avenue Supermarts. Revenue is expected according to the lines of what they had given in their quarter 3 update, roughly at around 15,500 crore rupees, which is an uptick of 17.5% year on year. EBITDA we're seeing at 1,300 crore rupees versus 1,121 crores, so it's an uptick of 17.3% year on year. Net profit, now the bottom line we're seeing at 873 crores compared to 737 crores, which is also an uptick of 18.5%. And when it comes to the EBITDA margin figure, that we're seeing at 8.4% compared to 8.5% year on year. A slight bit of a decline is what we're expecting on the margins front, but not much to worry about over there. Here are some key expectations. Revenue is expected to grow at 17.5% year on year, driven by store expansion and higher discounts. That's something that has done well for the company in this quarter. Marginal improvement in the sale of general merchandise and consumer sentiment has improved overall, so that is also something that could help the top line in quarter 3. EBITDA margin, however, like I mentioned earlier, we're expecting a slight bit of a decline on that front due to the higher operating expenses led by store expansion and weak gross margins coming in. Some important factors to watch out will be the SSSG, which is the same store sales growth rate, the outlook on general merchandise as well as the apparel segment of the business, any commentary on the impact of e-commerce and quick commerce, if at all the company is seeing, and their expansion plans for FY25. Remember, in quarter 3, they've opened 10 new stores, which takes their new total to 387 stores as of now. So we'll be keeping a close eye on the management commentary on those lines as well. But, well, yes, overall, a decent quarter is what we are penciling in.
That's that on Avenue Supermarts and the expectation from the earnings this time. But Kunal, just want to take a look at some of these names from within banks. Nishal was just talking about as to how the large cap banks are the ones which continue to be in value zone. And we've often talked about HDFC Bank and ICICI Bank. Stack it up for us. Where is it that you think that the decline is still to go? And where is it that you would now be comfortable buying the decline?
So I would still be more of wait and watch on many of these large cap private sector banking names. HDFC Bank was one of the stronger ones till just about a few months back, where HDFC Bank and ICICI Bank were the only two stocks which were closing in towards their lifetime high levels. HDFC Bank managed to rise up by I think 100 odd points from its previous highs of 17, 80, 90 thereabouts. But then the moment that stock had started to get into a correction, the correction has intensified and it's been relatively more weaker as compared to its immediate peer ICICI Bank, where over the last say 1 month or so, HDFC Bank has corrected more than 10 to 15%, but ICICI Bank has corrected by a margin of less than 10% broadly. HDFC Bank has also come back sub its 200 moving average, or just about on the verge of doing that. ICICI Bank has managed to hold on to those levels broadly. But then the other private sector banking names, Kotak Bank, Axis Bank, IndusInd Bank, I think many of these stocks have been huge underperformers, and they continue to be more of laggards. Even the mid cap end of the private sector banking names, the likes of Bank of Bandhan Bank as well as RBI Bank, IDFC First Bank, I think there are hardly any stocks which have actually shown signs of maybe resilience or some sort of an outperformance with respect to this market correction. I think that's one of the reasons why I would believe that maybe the entire sector would take some bit of more time to try and get its mojo back again. So far, as of now, ICICI Bank is the only one which is relatively stronger as compared to the other peers.
Okay, that's ICICI Bank right now in trade. But Rudra, what about the PSBs? I mean, that seems like a weaker trade right now. But do you sense that SBI could rebound from the 740 odd levels anytime soon? Are the charts indicating so?
Yeah, the last support for this stock is somewhere closer to that 730, 735 zone, and we are approaching those important strong support zone. So definitely from those higher levels from where SBI saw a clear fall from 860, where the resistance was, we have seen a relentless selling from 860 to current levels of 740. So if not a big bounce or a rebound, at least some support should emerge here and the fall has to stop. So closer to those levels of around 730, let us see whether SBI holds that last support which is there, and if yes, then only we can see some amount of rebound. And the same is visible even in PNB, or even for that matter Canara Bank. If you look at Punjab National Bank, yes, the support for this stock is more or less closer to those zones of 95, and we are again reaching close to that price from the current market price. And even for that matter, Canara Bank, if you see, strong support for this stock is emerging closer to those levels of around 90, 91, and we are already there. So for me, these are very, very strong support zones. If we break down, then yes, further selling can be seen. So let us watch at this crucial level and then take a call.
Let's see which way it goes. But for now, let's take some BTST trades as well from our technical experts. Not sure if it's going to be STBT or BTST given the nature of the market. But Kunal, what have you picked out for us?
So one buy and one sell. The sell, of course, is on the financials, on the banking, on the financial services side. So would look out for Piramal Enterprise as a shorting opportunity. The stock consistently breaking below its key support levels. Earlier, I had flagged off a target close to 1,000 levels. The stock has fallen below those points, so would revise the targets on the downside to 975. Traders could look at a fresh sell with a stop loss now till 2020. On the buy side, Wipro could be interesting pick. The stock is holding on to that level of 300, and we've seen the stock over the last 1 week, 10 days, going through a correction of 10% from 330ish, thereabouts. So I think at current levels, the risk reward could be attractive. Would suggest a buy with target of 310 initially, stop loss at 294.
Okay, that's a buy on Wipro and a sell on Piramal Enterprises. Rudra, what's on your BTST list?
Sell call. Bajaj Finance looks for me strong relatively, even in this weak market. Bajaj Finance is holding up, so I will be looking at buying Bajaj Finance, available even in futures, looking at targets of 7,350 with a stop loss of around 7,285. And a sell call on Indus India Bank, very weak stock, and banking not at all doing well. So one can look at shorting Indus India Bank, target of around 925 with a stop loss of 955.
Nishal, some of these underperformers of sort, barring banking, of course, has been, let's say, a chemical space or even cement for that matter. Do you expect any of these underperforming sectors to make a reversal in 2025?
The cement, definitely. I think cement for the next 2 quarters is going to be really good. This quarter, I expect cement volumes to come back strongly. From next quarter onwards, basically, we are going to see the pricing as well as the margins improve on cement. So I think cement is one sector one can look at. As far as chemicals is concerned, I think it's a long drawn-out process out there. I don't see much recovery. There is from the demand side, and China still continues to be a very, very big seller on the volume side, basically, as far as chemicals is concerned. So I think chemicals, one has to be very, very focused on which chemical chain one is buying into. So there are several companies, like yesterday we had the SRF and also the gas part of it. So I'm saying you have to be very specific as far as chemicals is concerned, but cement, definitely you're going to see a recovery in this current and the next quarter.
Point taken. So chemicals as a space looks good. But Nishal, what's the view on some of these capital market plays? Now, of course, financialization of saving has been a big theme, and we have seen the SIP figures come in. But on the other hand, the F&O volumes have trickled down. That's a topic we picked up with the BSE management as well. But first, tell us your view on what should one do with the capital market stocks?
I think for the moment, hold on. I wouldn't recommend buying any of these, given that they are all at very lofty valuations. If there is a quarter or two, basically, that's what my thought is, that this underperformance or the market being on a corrective mode should be a quarter or two per kind of a situation, and thereafter it should improve back. So in that kind of a scenario, basically, hold on to your stocks. As far as somebody is looking to add, then wait for I'm saying a 5 to 10% correction in any of these stocks to buy it.
But as we were talking about, we did speak with the BSE management earlier in the day. Hear out his latest commentary.
As far as our strategy is, there are two parts which I look into it. Whatever we have achieved as a group put together, we should make it sustain. So what all things I should do at the helm of affairs to make it sustained for long. That would include a lot of infrastructure creation in terms of talent creation, retention, grooming, infrastructure creation in terms of physical infrastructure, technology, technical, all that stuff. We are working in a big way on it. And with that infrastructure, what you deliver, that is customer delight, which is again we are working for it. And second is futuristically looking at what more we can do. At this point of time, that is another area which we have taken up very seriously. We feel we should diversify our revenue bases. It should not be simply trading revenue coming out of equity and equity derivatives. Diversify revenue, create infrastructure and customer delight to ensure sustainability and growth will be the path for us in the coming year.
That's that on what we're anticipating right now in terms of growth from BSE. But Nishal, great to have you on the show. Rudra Kanar, we'll let you guys go on that note as well. I'm going to quickly hand it over to Snehi then to wind up today and the week's action for us.
Absolutely. Let's take a look at what the Nifty has done over the course of the week. It's looking negative for the course of the week as well. A 2.5% cut roughly coming in for the Nifty. If you take a look at what the Nifty has done today on an intraday basis, some sort of recovery is what we have seen from the day's lowest point, but we are still far away from the day's highest point. We're somewhere in the middle and we've slipped from those more than 23,550 levels, and we're sub 23,450 also right now. So looking very weak. We're ending this week as well as today's intraday session on a weak note. Sensex also today following suit, then 0.2% cut coming in on Sensex as well, below that 77,500 mark for now. Advanced decline ratio very steeply in the favor of the declines coming in today, so that's also something that's not looking good for the markets. What has done even worse today are the broader markets, because Nifty mid cap down by 2%, Nifty small cap has even underperformed that as well. 2.6% cut coming in on the Nifty small cap index today. Nifty Bank also 1.5% cut coming in. So that's something that is not looking good at all for our markets today, and that is how the market breadth has shaped up to be like in today's trading session. India Wix a further uptick of 1% coming in, but not too much to worry about because we are still sub that 15 mark when it comes to India Wix, but well, we are very close to that level, so keep a close eye on India Wix as well. Let's take a look at some sectoral gainers and losers in today's trade. Nifty IT, the clear outperformer on the back of a very good set of numbers coming in from TCS. Order win looking good, management commentary and guidance going ahead looks solid as well. So on the back of that, TCS was also doing well, and a 5.5% uptick coming in on TCS today. Infosys is also following suit, 2.5% higher is where that was. But what did not do well today at all was Nifty Media, your top sectoral loser. You have Nifty Realty that followed that, roughly 3% cut coming in on the Realty Index today as well. That was led down by Oberoi Realty, a 5% cut coming in. You had Godrej Properties, DLF, Brigade, Lodha, Prestige, Sobha, all of them languishing in the red from the real estate pack. Following that was Nifty PSUs that did not do well. Bank of India, Union Bank, PSB, PNB, IOB, all of these were in the red as well. So well, you have Realty, PSU banks followed by Pharma, Energy, Metal, Nifty Bank, Auto and FMCG that are your most to least losers in today's trading session. A couple of stocks that were in focus today. Ireda on the back of its numbers, that stock has seen a little bit of a cut coming in. You also had more stocks that were in focus on the back of brokerage notes, the entire city gas distribution space on the back of that APM allocation, a hike in that. So MGL, IGL, GAIL, all of these stocks were in focus, but they're all seeing cuts. Jefferies had come out with a note on metal, so the likes of Tata Steel, SAIL, Nalco, Hindalco, JSW Steel, all of these stocks were in focus today. You also had a brokerage note coming in on the entire CDMO space, where it was a positive note coming in, but nonetheless the stocks, the likes of Lotus Labs, you had Pyramid Pharma, all of these stocks were languishing in trade, even the likes of Divi's Lab as well. All eyes are going to be on Avenue Supermarts because numbers will be reported tomorrow. That stock was under slight bit of a pressure today. More than 3% cut coming in on Avenue Supermarts, and Monday, well, from the IT bellwethers, you have HCL Tech coming out with its numbers. So HCL Tech was also in focus today, but that stock has managed to hold up pretty smartly in today's trading session. But nonetheless, this is how we are wrapping up for the week. Nifty 50, a cut of 0.4% coming in and still under the 23,450 mark. So well, we've ended the week on a weak footing. Let's hope next week is better for the markets.
If you like this video, then like, share and subscribe to ET Now.